So this one I'm super excited about, and it's kind of basic if you've traded volume profile. Volume profile to me is probably the number one strategy that I utilize. It's super dynamic in nature. You can use it across anything: penny stocks, crypto, futures, any form of futures, commodities. You could use it on oil, whatever. Literally anything in the market. Volume profile is a strategy that you don't need to adapt. Like it's driven by price. And that's what makes it so dynamic across the entire market and really simplistic in nature to where um, you're only going to have a few high probability entries. And if you're patient enough to let those entries materialize, the range of those entries is going to be super depth or deep. So love the profile. Cannot stress enough. Like if you are looking for an edge and you're kind of bouncing between different things and you really can't find it, my high recommendation is to actually dive into the volume profile because it's so simplistic in nature and it's really non-negotiable from like a risk management perspective as well. So we're going to dive into it. I got two presentations, pretty basic presentations, and then I'm going to go over some things on the chart as well. This one excites me for sure, and it's really not too in depth of a presentation in my opinion, or even a hard concept to really grasp. Um, so yeah, let's dive into it. So for me, I always love to know what am I using and when was it created and who was it created by, so I can kind of like study that individual and why they created it. So it was developed in 1985. So that's super interesting to me. Like right at the peak of technology coming into the market, like this was implemented. And it really was implemented because the market looked at it from a time at price perspective. So, like, market profile is time at price, but the gentleman wanted to create volume at price. And there's two different things and two different strategies that go to how long was price in a known area to how much price is accumulated in the same area. And that's really the direct driver between the two. Um, Both are super effective. I think market profile is really hard for the average retail trader to grasp because you have to look at the 30-minute chart. You have to learn the alphabetical sequences that go behind market profile and the expectations that go into it. It is a very effective strategy, but it's super hard for the average trader to grasp. But like the transition from market profile into volume profile, the gentleman was super smart and on point of why he's looking at that, comparable to like time at price. And I think there is a correlation between the two. But if I were to kind of quantify what matters most is participation. So if I have price that's stuck for 7 hours compared to I have 7 million shares at this known price, it's much more tangible to say, hey, this area matters. So that's the reason and the driver was it was created. And shout out to that gentleman in 1985 for having the vision. So volume profile. Very, very simple. I know you guys probably know it. And if you don't, I recommend you even researching past this presentation. So it is volume distributed by price, not by time, as mentioned, right? The core concept is to map where the market accepted value and rejected it, right? So you're going to build acceptance areas to where price no longer goes above or below. And I will show today's session to really drive that home. But that's essentially what this is telling you is where's value, where is the support, and where is the resistance, right? And this isn't a negotiable support and resistance. This is direct from volume and literally what the market is telling you. It's used for context, risk placement, and execution. So it is not a standalone signal, just like everything else within the market, right? Good examples are on the chart. that I created to where you really look at it from a wide approach. So you're going to have value area high, value area low. That entire range is what's called the value area, right? It's going to make up 70% of price for the entire day or for like the entire week, the month, whichever aspect you're looking for. It's going to make up 70% of that known range that you are observing. Point of control is generally going to make up the other 30%. So when you really think about it from that scope of you have an opportunity to either play a point of control, retest and have, 70% of headway to be able to make an effective trade. That's really why I love this strategy because it's so dynamic and gives you such a wide range for opportunity. And then the high and low dynamics. So high volume when you're looking at a profile, that is your acceptance. And for me, I think it's super tough to teach price action to traders. I think if you're struggling to learn it, don't beat yourself over the head. You have to be in front of this screen for numerous years to be able to say, you know what, I have a strong grasp on candlestick analysis. When I feel super confident in a breakout, and I'm able to read volume and candles alone, right? Well, the profile does a really good job of just completely mitigating that price action concept that you need to learn it, right? You still need to learn it, but this is a good crutch until you're super confident to read price action, right? So when you have like what's called a high volume node, which would be this area here, and price holds it, for example, right? You come into it, price holds it, and you reverse. From a visual perspective, it's really not too hard to say, hey, I know this is the most accumulated volume and it held. This is buyer confirmation. I don't need to know what type of candle it held, what type of price pattern it formed. You remove that analysis paralysis variable from the entire situation. So it's super effective um, with really giving you a co-pilot to remove a lot of the headache and variables that the average person trades in the market. Low volume or inefficient markets, this will let you know that if you're in a trade and you're approaching these formative areas from a volume perspective, don't expect price to behave normal. Is the long story short. Like if you're in a low volume node, price is going to be super inefficient. It's going to be super random. And if you're in that area or in that mix, you probably shouldn't be in the trade, right? So it's also a really good tool for risk management. And then to kind of piggyback off that, so like profiles are descriptive context. They don't predict direction by themselves. Same thing you'll hear me say about candles or price patterns or really anything in the market. It is non subjective and it's super descriptive with an intent behind it. So, going back to the example, if you were to hold like a high volume node, that is the intent and that's the descriptive context that the market is giving you. But it's also super important to know it's most useful when paired with a few things, right? So regimen that I talked about, which is your edge, right? Are you a trendy trader? Are you a balanced trader? And if so, then you have to kind of quantify what is the time of day that you're looking to trade and what variables of price around the profile fit that edge. And then obviously, if you have catalysts that are coming into the market, those are going to change the dynamics a bit. So you have to be aware when those are coming. Simple breakdown of what this is, just to really reinforce it. So point of control, price with the highest traded volume. So that is the middle point. And what you'll find with that middle point is regardless of how far you think price is extended, it will always hunt its way back to that balance point. And that's just how market dynamics work. And the point of control, sometimes you're like, there's no way it's going to get back to this area. The market will surprise you and it will make its way back to that point of control. The value area, again, makes up 70% of the total profile and the total volume range that you're looking into. And again, that means that you have 30% opportunity to play one side or the other from the point of control, and then 70% to like play the extremes from that point of control retest. Those odds excite me. Knowing if I have a break and a clean break of the point of control, like I have some range and expectations to go along with it. And then value area highs. So this is going to be the highest point the price went. There is a variance between the highest volume and then the highest price, and I will show those on the chart. And then value area lows, same thing. Super important to know that when you break one of those value area highs or lows, you're going into a market that really no longer makes sense. It's going to be super aggressive. The range is going to be 2 to 3%, 5% gold. Those days where you're like, man, how is this happening, and when is it going to stop? They typically occur with intent from a value area high or low break because you have reached a liquidity standpoint within the market, and it really doesn't take much to sway price one way or the other. Interpretation, so value area is fair value zone, and then outside of those are unfair auctions is what I classify them as, because you really have an opportunity to either get with the trend super aggressively, or you're going to get steamrolled when those happen. So for me, I prefer when we extend past the known value area. I don't like to be in those trades personally, unless I'm in already and enjoying that trend. So you know if you're extended and you're breaking one, just be very careful on expecting like a reversion trade. And then the importance of understanding the difference. So high HVNs and LVNs, right? So high volume nodes and low volume nodes. The high volume nodes are typically what you're going to see at your point of controls. It is what's called a volume shelf, where you have strong acceptance and you have agreement across bulls and bears that this is where price belongs, right? And it also often is going to be your strongest support and resistance. Your low volume nodes are going to be super thin price liquidity voids that price can travel quickly through, create uncommon gaps within the auction, do numerous things that you are just blown away from within the market. And it makes complete sense because there's no volume there to put up resistance one way or the other. And so when you have a trade and you're trading into that shelf and price is going your direction and it breaks it and you enter a low volume node, your confidence to hold that trade has to be high. Your expectation has to be to come to the next known liquidity point, which volume profile will do such a good job of painting out for you. So think rotation, high volume nodes versus impulse within the low volume nodes. And that'll help you kind of dictate the waters between the two. So balance acceptance. So two-sided trade or a fat profile, you expect rotations in the market, right? Not going to be one-sided agreement on price. You're going to have variables. You're going to have an opportunity to scale into a trade. You're going to have an opportunity to be incorrect, but you're going to have that opportunity to be incorrect small. When you're in that imbalanced state, it is a one-sided initiative that typically creates the trend. And you have to know the difference between the two, because if you are trying to scale into that imbalanced state and you're over leveraged in that position, that is where people are really, really going to get hurt. So profiles help you ask, is price being accepted here or rejected? And it's really going to separate the two to know when you should be in a trade and when you should not be in a trade. You hear me kind of lean on those two forms of prevention to really protect you as a trader. And kind of a visual breakdown. So price is inside the value area expected rotation zone per se, right? Like point of control tests are super common, like super common if you're within that range. When you get above the point of control, immediately we kind of think breakout. but this strategy is meant to have a reversion sense behind it, to where when you are above that point of control, you're actually looking for a seller response. Doesn't mean you're not in that breakout, you're not enjoying that trend in that breakout, but if you have a super high volume shelf and you're breaking out a point of control, in the back of your mind, you have to be aware that failure to accept higher is a very real reality. And that's where the volume profile will remind you, hey, I need to take profit. I'm approaching a high volume area node. I need to probably scale out because I don't want an extreme reversion candle to happen within the moment, right? Same thing when you're below POC, point of control. It's called a discount, in which truly, when you look at market dynamics, this is the place that I personally target and the place you want to be. You look for buyer response. So you look for failure to accept lower. So a lot of times you'll have what's called a defended shelf, which is an extended fat profile that price will hug down to and it'll reverse. And those are the moments where you know what, you're like, man, I get a discount buy on this and have an opportunity to ride it back up to point of control. For me, I'm not a perma bull. I look to short the market, but I have much higher confidence going long. So the probability of these working out to me seem to be higher, and I'm more comfortable being in a defended shelf with a buyer response, understanding I'm below point of control, and I have an opportunity to really get a discount buy and ride that bad boy up, right? Important to remember, so edge is strongest when confirmed with tempo or time or order flow and location of the low volume nodes, right? So if you have an opportunity to catch a defend off a high volume node shelf and you see there's thin air above, take advantage of that set. Be not be aggressive, but be confident in what you're seeing on the chart. And the value area reversion. So the concept is to fade extremes back to point of control when balance holds, right? So when you have this known range, you have known opportunity on both sides. So that's the number one important aspect of this, right? The value area breaking acceptance is a breakout in acceptance above or below the value area high. These are your extreme plays. These are your high confident plays that are going to be impulsive and they're going to move quickly. And this is where you have the opportunity to really take a true breakout comparable to being in a known range and playing a reversion set. Although you may be taking a prior day low entry and maybe riding it up to prior day high, you're still within an inside known range. Whenever you break that out, is where you really get the liquidity pushes behind it. The low volume node air pocket, so price accelerates through thin volume, manage your risk tightly again. Um, and then the high volume node shelf defense, acceptance zone acts as support and resistance for rotations, right? So this is where that market dynamics 101 really plays the largest factor in success behind the profile. So volume profile, time frame, and rules, and how I analyze and use it. So session volume profile. If I am just trading current day price and price only, I'm looking at the open, midday, the midday balance point, and the close, right? Those things matter when you're trading the profile because every liquidity between those three is going to be super unique. So when the market opens, you at least need some form of swing high to be able to base the profile off of, right? So it's a super patient strategy. If you're playing same day session volume profile, you have to let data form. To me, it's best if you're going to use session, use the prior day session because you're going to have confirmed breaks of critical liquidity points. Composite volume profile is where the market has agreed for days or weeks, and it's typically going to be a macro value area. Um, I will show what I do and what I looked at today and how it worked out using a monthly profile. So it really doesn't matter um, what session you're looking at, other than the range of those sessions is two different things. So you have to be aware, like, what you're targeting and what you're looking at, but the dynamics and the functionality are the exact same. Anchored volume profile is an event, is what I'll say. So you have FOMC, right? You're looking at low to high within that range that it's formed before Powell's about to come on and talk. Like that's a sense where you want to use anchored volume profile, and it's super helpful because it's giving you real time analysis of the data that's on hand. And then again, you have all these variables. Trade the lower time frame trigger in the direction of higher time frame context. So if I am looking at a weekly volume profile and I see I have a hold, of the point of control from a weekly perspective, trade in the direction that it's showing you, not the short term price analysis that you're doing. Respect the larger time frames. And then how firms use volume and price. So this is adapted, but it's still useful, right? So in execution planning is really something my time in the realm is like, that was 80% of the job, it felt like, is you're really doing these analysis to really drive the choice that you're doing, right? So like your times, your ventures that you're doing it in, where liquidity is the deepest, your composite VP, where is the market agreed for days, weeks, like what is the highest probability of volume accumulated? And then your benchmarking and total cost analysis is something I've talked about a lot. But your TCA, when you have a cash account, has to be quantified in there. So you have to compare your fills like versus VWAP. Are you at the arrival price? Identify slippage drivers. A lot of different variables that go into like super calculated entries. And then liquidity mapping. Where will size get done with minimal footprint, right? This is super non-related to retail or what we do. That's essentially what institutions are looking to do. It's like where can they map out the highest liquidity points without making the biggest footprint within the market? Typically going to be your point of control areas or your accumulation zones, right? Um, the purpose from like a firm, and I love to highlight these things because the end goal, which is hard, but the end goal should be like, how do I trade like a firm? How do I get aligned with what a firm is doing? And how can I mirror some of those tactics behind it? And I think that's something that as traders, like we want to approach the market with, and we really want to have that wider sense of knowledge and awareness within the market. And then profiles are one layer in an execution plus risk stack. And so identify liquidity regimen, right? Are you deep versus thin? And are there any scheduled events that are overlapping that liquidity? Map composite values, so point of control, high volume node shelves, and thin zones. Map it out. If you're looking to do multi-time frame analysis, and I'm looking at a weekly profile and you want to keep that there for wider knowledge, map it out. Decide execution style. Are you going to be passive and provide, or are you going to be aggressive and take? Because there's two different variables that you're going to have opportunities to trade within this profile, right? You're either going to have the point of control, um, passive entry, or you're going to have the aggressive entry, which could be a break of point of control, or it could be a bottom or top support hold, which is aggressive. And then monitor microstructure, so spreads, the order book depth, volatility spikes, things that you'll always hear me constantly talk about. And then again, measure slippage, impact, and adverse selection after the fact, right? Um, so you have to, once you have that analysis down, like you need to know the slippage, the impact, and the adverse state that it can be in, and then select your measurement or trade after all that is known. You have to know what that is. And the way I view it for retail is like your slippage could be your known risk zone. The impact of the trade that you're taking on your account um, must be known. So you have to know what that is. And then a role based approach that respects your constraints. So pick one session. My advice is don't mix signals. So if you're looking to trade high confluence, trade that high probability set because your expectation going into that trade is probably going to be different. Um, I say that, but it's okay to have multiple time frame analysis within that chart. Just don't treat them the same. If you've been with me in any of my sessions, I change the color. So if I'm doing a weekly or monthly perspective, like I change the color of that profile to know that it's going to hold more weight. Define the day's bias. Are you balanced or trending? And is the profile shape plus the price behavior really driving the trade? That is important, and I'm going to cover probably the most four basic um, images that the profile dictates and how you want to trade them. And then trade location must be known. Are you at an value area extreme, a low volume node break? Are you in a shelf that's being respected? All of those have to be validated with a trigger. And then risk first, as always, guys. So stops belong where the auction thesis isn't validated, not random. So if I'm going long value area low and it cracks that value area low, I must respect that because I know based upon the liquidity that drives this strategy that it can get super ugly super quick. And most losses come from treating it like a single line indicator. It is far from that. It is driven by volume. When you talk about liquidity and price in the market, this is it. It is not a level. It is not a line. It is not basic support and resistance. One of the biggest mistakes for people adapting this is like you come up from the value area low and you come to point of control and you're thinking, damn, this is an automatic reversal. No, it's not. It's a reference, it's an opportunity, but it's not a certainty in the market. Ignoring the regimen. So if you're in a trend day and you're in low volume state nodes, like it doesn't behave like a balanced day. This is again where I think the majority of retail traders really get destroyed. So this will protect you in that environment. And then building profiles on illiquid markets. So um, anything we trade nowadays is pretty liquid. But if you're in something that has no volume, don't expect this strategy to work. You need volume to be able to support a profile. I don't see or picture anybody trading anything illiquid, but just know, like, if you are, this is going to be completely skewed. And then changing settings constantly. So, whatever that session is, that is what that session that you're going to trade is, right? Cannot move it, you cannot tweak it until it fits. If I'm trading off the weekly or prior day, leave that bad boy there. Don't try to tweak it and change it and alter it just to fit. It's there for a purpose, and that purpose will serve you very well if you just leave it alone. And then the concepts that you want to see. So you want to see a balance, breakout, and trend variables when you're trading profile. And this is like the extent of what you are hoping to do. So when you're in that balanced state, you're hoping to get a very clean break and retest to the point of control, right? Similar to what you've heard me mention about supply and demand, like you are hoping to see this form of interaction within the market, right? This is your balance state, and this is where you're going to have the less amount of risk, the least amount of risk on a trade that you can possibly have within the market, right? When you're in a breakout, right? So you've held point of control, you're in this aspect of really breaking out of the value area high. Like you have to be aware of what that looks like and that these type of rejections are possible, right? So you see this form of false breakout and it's gonna still be in the balance. You're still safe from that trade. And then when price clears that above area, you know, now you've really had true acceptance of this area. It's not always gonna be like a clean break and retest, but this is ideally what you're gonna see with a breakout at these key areas. You're going to see some form of liquidity test. You're going to see, you know, potential balance forming or imbalance down, but then you're going to get the solidified break. This is typically what you're going to see in those extreme states of the market. And then the trend state, right? So you've accepted point of control. Every sense of liquidity is super low above. This is what you expect to happen from a volume perspective. Long as there's no macro events that are really driving it, like that is your acceptance of the point of control to break a value area high. You're in a low volume nodes above. You're expecting a trend through and through. Balance rotation around composite point of control. Fading extremes is logical, right? You're still in that logical states where you have opportunities to play both, right? Breakout, you watch acceptance above value area high versus rejection in the snapback, right? Um, you need the snapback in order to get like a clean break and liquidity test of this high. If you're just raging through it, those are harder for me personally. Like I love a retest and then place a pending order, above the body high or whatever, and like really get the extent of a safer breakout buy. And then the trend. So value migrates, new high volume nodes will form as the market builds. So you're in that low volume state. Once you get a surge of volume, the profile will paint that in real time to give you extreme confirmation. And then again, thin zones equal speed, the shelves equal patience. There's a big difference between the two. And then if you want to learn more, which I always recommend, so study the CBOT era, the market profile work that they did, right? And then the platform knowledge is super crucial. So had a gentleman point out some variance within the TradingView volume profile, and I was like, man, you are correct. Like I use TOS, and they're two different things, right? For me, chart what you trade what you chart is the way I view it because what I trade on TradingView is effective, and what I trade on TOS is effective as well. So it's crazy how fractal the market is. And then the exchange microstructure perspective. So the market profile I talked about earlier, study that if you're interested. It's a really good tool to give you extreme in-depth knowledge to what this is and what time at price and volume at price really are, and that's true liquidity into the market. And then journal. Yeah, I'm a broken record with this one. Your profile hypothesis, your trigger point for the trade, the outcome for a minimum of 100 trades. Like you have to journal and really put in that work to really define like an effective edge. And what's up, Dan? Everybody who came in, appreciate you guys. So this is what I wanted to cover secondary. And I made these too big. But essentially, the profile will form letters. And that's where I was just mentioning that the market profile does play a small factor in because they kind of correlate between the two. But you have expectations of the market when the profile forms a certain pattern. So this is a D-shaped profile. And I generated these images myself to really try to make them imperfect because this is really what it looks like. You're not just going to have like a in-depth D on the chart, right? Like there's going to be some variance between the two, just like a price pattern, right? But you're going to know within this strategy that you're skewed within a few variables of price. And like this is the balance state to where your highest focus is going to be that point of control because you are looking for price to either one, come into that balance and really give you an opportunity to ride with this accumulated volume. Or if you were at this low and you're identifying this profile, like you have an opportunity from this low to really get up into some of these liquidity tests. That is what the D shape is showing you. It's showing you you're in a balanced market. There's a lot of rotation of volume within that market. You're going to have multiple opportunities to kind of take a safer entry. The expectation is acceptance of value, and rotation dominates this strategy, right? So this is your range strategy when you're in that D-shaped profile, and it really is meant for reversion or stacking your entries up at point of control. The P shape is similar in nature, except you're going to have really weak structure below comparable to some points of liquidity here. Like you're really going to have low volume nodes all the way low, and in potential that once you get above this area, anybody who was short is probably going to get liquidated because you have a P here that's representing a couple high volume nodes. And when price really gets above that area is where you're going to create the emotional upside. Um, and it's going to be aggressive. Like whether this be an inverse, it's a lowercase b technically, whichever way helps you learn. Like whether this be an inverse p, lowercase b, or an uppercase p. These are your trades where they're going to be super aggressive because you only have a few high volume area nodes to kind of prevent any upward space. And then once it does go, like this is through and through clear skies per se, right? So when you see you have support down at like this value area low, similar to the balance rotation, if you're in this trade and you see it's a P, your expectations are to test liquidity, point of control, and then once it gets above, that known high liquidity, you're gonna melt some faces off in that scenario. Keynotes, it must accept above value, right? So if you're in this trade, you know you have your value, you know you have your highest node, like ensure that it's accepting it. Because if not, the failure will rotate back down and kind of create a new liquidity structure. Keep in mind, in this P, the weak structure is below, high probability above the point of control, and then really clear skies ahead or below. The B shaped is kind of inverse. So it's the exact same thing, but opposite. And you'll see this. This is your opportunity to really short the market when you identify these because you're going to have super defensive selling um, at key areas, right? So if you have like a point of control retest and a low volume node here, like your expectation to get a long liquidation drop to this area, those are those candles that we saw today, to be honest. You had a high accumulated area, snapped through a low one and went to another high one, right? What happens in this B pattern, whenever this pattern is broke, is you're going to have defensive selling. You're going to have extreme aggressive selling underneath it. Because similar to what I mentioned here with the upside air, same on the downside, guys. Like you're going to have extreme selling until the downside gets exhausted, just like we saw today. When you're in this trade and that reclaim and that bounce is there, just like it was today at the end of the day, know that this same thin air is going to work in your favor, right? So it's rotational in nature. And then the trend profile, which is super rare to see this, but it is a reality. To where you are going to have like a mountain of liquidity building from a base all the way to the high, right? And it's like super dense, um, super thick. There's volume everywhere, and this will come. One thing I constantly look at is like SPY volume, and those days where you're above that average, you see this within the profile. Typically, give you a good example last April. So you had that big sell off, volume decreased to like 75% less than normal. And then it was a great time to buy, right? Well, that's when the profile was really showing this. And it was really super clear that, hey, this is not a time to be shorting the market because there's liquidity from the base to the peak. And everybody's a buyer at that current state. You will rarely ever see this from a selling perspective where you just have a agreement upon price, but you will see it from a bullish perspective. When you're in this state, so the value migrates comparable to a known value set here and a known participation level that's going to give you known variables. Here, the value migrates. And there's a difference because you're going to have volume that was already high. You're going to get more volume along the way. And then what will be a low volume node will probably turn into a high one, just because it was already high to exist. When you're in this state, pullbacks are your entries, comparable to targeting a discount or a premium. Like pullbacks are your entries within this state, and fades are super low probability. It is rare to see this, but you will. And then this is the most common and the funnest to play. So double distribution, to me, is really how the market operates from a liquidity perspective. It's where you have fair balance, right? So you have an old value at the low that's been established prior. You have a new value at the high that's like super agreed upon. And then in between that, you're going to have a low volume node that doesn't have agreement. So what you want and what you hope for is almost like a double bottom in a sense, to make it super simplistic, right? So you want price to come down and really respect this old value shelf, right? You know you have this opportunity to target the low volume node and then repeat that exact same process within the new value, which will typically be either one, a point of control retest, or it's going to be a high value area breakout, right? And then you repeat that process because once you get through this congestion, it's the exact same thing, right? So this is where you get those days where you're catching 200-300 points, and the trade is just so smooth because you were either able to time a rejection here where it should have went through clean price back to the low, or you sniped the low with confirmation, read it super smooth. It accepted this area as new value and continued up. So the B, this is called a B profile. This is the most enjoyable one that makes sense to where you know if you're in between here, the chance for price to accelerate is pretty high. But comparable to this, where you're trying to potentially take a value area low entry, these are completely two different variables of price. So when you see the B form within the profile, this is where I'm super aggressive within the trade. So the expectation would be a balance and imbalance and then back to a balanced state, right? The low volume node accelerates price one way or the other, just like we discussed prior. It's the most beautiful aspect of this price pattern. And then old value will either flip support or resistance. So what was prior support? If it held it, like that's your probability, and that's your extreme probability to be in that trade. And then the trade expectation matrix. This is something you'll see me give out within every meeting. It's like some form of handout to make it simple. So the D shape, you're expecting rotation. You're looking to fade extremes, target the point of control. The P shape is where you're really looking to get into that lower, target the pullbacks. And then once over that acceptance area, like you expect shorts to get liquidated. The B shape is the inverse. So you do expect long liquidation to kind of drive that trade. The only thing is you have to know that you reach an exhaustion state within the market, which happened today at the back end of the market. And then you look to reclaim that trade and really ride it the inverse way. Both could be said for the P shape and the B, just the B has higher probability. And then the trend state that I mentioned, it is initiative control. There's no other way to word it. There is an intent that the market is hunting for, and it's going to get it whether you and me like it or not. And that's something to where these are the days where retail just gets destroyed. So even a peek or a glance into the profile can save your account, even if you're not into that trade, right? So if you see that profile form, like those days aren't the best, even for me. Um, don't trade. And then if you are trading, ensure that you're not trying to call the tops. You're targeting pullbacks only. And then the expectation of that is range extension. And so through and through, the concepts are going to be price discovery, your low volume node entries, or price acceleration, and then a high R to R. That is what the profile is going to give you through and through. And that's it from a presentation perspective. Oh, where are we at? There we go. So, um, pretty basic, right? If you've traded profile, like you know this, I think there's always something to be learned. Again, if you weren't here in the beginning, any market, anytime, this is a proven strategy that is driven by the most important thing in the market, and that's price. So it's descriptive in nature, it's non-subjective, and it's you can trade it on crypto, oil, NQ, literally anything within the market. So again, if you are struggling to adapt or find an edge, I highly recommend that you look into the profile. And before I go over some real chart examples, does anyone have any questions? And I will absolutely check out Volumetrica as well. All right, 7 seconds of silence. That is the corporate lingo to move on. All right, so today, and I want to run through this in the way I viewed it. I did take a trade here. It was a good trade. I was an idiot lower, but I did take a trade here, and I want to get to how we really break it down. So, as I mentioned, super fractal in nature, the profile is in the market as a whole, right? So, one thing I was analyzing and looking at from a weekly perspective is this prior candle. And to be honest, like I don't think it's a secret, the market has been insane. And the range that we are in is it's crazy. And I popped this on and I'm basing it off, again off the prior week bar. And if you look at the dynamics of what this profile is telling me, well, this is the highest volume area, accumulated area. I have some thin opportunities here, right, comparable to this volume. And then underneath is like nothing there. Even lower, nothing there. And I do want to highlight where price stopped today from a low point. It's like super basic. So trend line, this is a weekly trend line here. You just need to make sure you have 3 points of contact at all times. And like that's exactly where price stopped. When I was in the live earlier with when Mike was live, I saw this lower and I was like, there is no way in hell that it's going to get there. But then when price really gave up the value area low of this weekly, this prior weekly, and closed below, I was like, holy crap, it's actually going to push. And it makes sense from a volume perspective, right? Like there's really not too much here from the prior week to really prevent it from getting there. The market blew off my expectations, but from the systematic approach, like this is the prior week analysis, and then just looking into today, I'm gonna go to a 30 minutes to make it a little cleaner. Like this thing, when it really rejected value area high here, it did it. Basically, this established high is from the prior week. So 26, whatever this is, 2610, like the value area high from the prior week nailed it. Like this was non-negotiable. The price was not going higher by any means necessary, right? And it's truly beautiful to see that when you're doing TA and you're looking back and you get price to like do a dead halt right at your key area, like this is what you want to see. Even if you didn't take this trade, doesn't matter. If you can get the validation of price really respecting that zone, like that's all that matters. That's half the battle in my opinion. And then here, whenever price rejected this area, I say rejected, like whenever price really gave up what's the centralized volume state of the market or the balance state of the market, this thing dumped. It was super aggressive when it did, and there was no stopping it until value area low, right? So proof of concept is here, right? You have, I don't know why it may be a wick up here that it's not showing, but you have the highest point of today here, which looks to be overnight, is why it's not showing it. looks to be overnight was your highest point of your value area high, right? And then the proven concept of you really breaking this down was that point of control driver, right? When it broke point of control in this high volume node, well, look at the descending volume along the way. This is textbook from what you would want to see. Really don't expect it to be that aggressive, but this thing broke in a very systematic way and didn't stop until you got to this value area low from the prior week. And then where the real test was kind of this weekly trend line as well. So like it tried its best and maybe my drawings off to get there, but like it really hugged that area. And then similar to what I just talked about, when you're in this state of the market, expect exhaustion because you've essentially completed every liquidity target and mission on the chart that is possible. So like if you're riding this and you see, okay, there's really no more aggressive selling comparable to up here at this point of control break. Okay, we're exhausted in a sense, which will always happen one way or the other. So this is like super textbook to what you would want to see. Prior week playing current week is something I love to do, and I'll remove this here. Like I'll remove the profile itself because to me it's not overly important at times, and then I'll change the colors of this one, and then I'll go to a daily chart and then repeat the process on a different time frame of profile, right? So like tomorrow I'm still going to be trading this weekly prior weekly range, but now maybe I only look to trade um prior day as well. So maybe I'm interested in these areas from prior day, but I'm keeping bigger picture perspective on this chart. That's where you're really going to find the balance between the two. And the most important thing, like I mentioned earlier, is if I'm going to trade this daily and weekly, there's no need to come to a 3-minute intraday chart and try to map out the session as well. I have enough data to quantify the highest probability trades of the day. And if you really look at it, and this is what I love about this strategy, my concept in the market to remove human behavior is I need to have a known entry within the market at all times. If I am entering at this low and I say, you know what, I have two value area lows at this low, and I enter this trade and it goes against me, no big deal. And the reason it's no big deal is because I'm aware, well, shit, if it breaks this, my set isn't there. Like I literally have a systematic approach to tell me why I should be in. And then if it doesn't work out, I know the potential, knowing the trade rules that follow, are like super wide to have. I mean, there ain't nothing here. You know what I mean? Like we have to look so far left to even get relative price. Um, so if I'm looking at this through and through, like I have 1, 2, 3, 4, and 5 potential trades within this range that I should be in. And if I am not at a key area and I'm taking a trade and I'm using their strategy, well, shit, you're just gambling at that point. Like you're really not giving yourself a definable edge to be in the market. So that's the high quality type of setups that you would expect from the volume profile. And that's really it. If there's any questions, feel free to fire away. I'm going to go ahead and end this recording.